Hi, this is Shaheedah Hill, getting you over the hill to home ownership and helping you confidently buy your first home. I'm excited to have Angel Bailey from Homestar Financial. And Angel husband is a home inspector, and he was like, you have to meet my wife. She's really, really good. And we talked on the phone about, really being an advocate for first-time home buyers. So I'm excited to have her. And this is one topic. This topic right now is not for everyone, but I'm going to have her back because we're talking today about VA loans. So all about VA loans and how you go about getting them and how you qualify, all of those things. So please stick with us and we'll get all of your questions answered. I'm going to allow Angel to introduce herself.
Yeah, thank you so much for having me on the show today. I'm super excited to be here. My name is Angel Bailey, and I'm a loan officer with Homestar Financial. The company is based in the Metro Atlanta area. My office is also in the Metro Atlanta area, but I can do home loans all throughout Georgia and also Florida. But of course, some of this information will be similar if you're located in a different state. So hopefully some of this will apply no matter where you're living. And of course, if I'm not able to do your loan, then I can definitely connect you with someone. So hopefully this will be useful for everyone.
All right, thank you so much. So tell us the basics, Angel. What is a VA loan? Like, what's that even VA stand for, and who qualifies for a VA loan?
Okay, yeah, great question. So VA is it's a loan guaranteed by the Veteran Administration, essentially. To qualify for a VA loan, you have to either be a veteran or currently be in active duty. So if you are a veteran, you need to have been in the military active service at least 90 days during a wartime and at least 181 days peacetime. So if you are a veteran or you are in active duty, you may very well qualify for this advantage. So if you want to determine if you qualify, you would want to go to the VA website. So I believe it's literally like va.gov. But if you search it online, you'll be able to find the website. And what you want to look for is your certificate of eligibility. That will let you know if you're eligible, and you would want your DD 214. So what is that? That's a dishonor. That's like your discharged paperwork.
Okay.
So we want to make sure that you're honorably discharged. So that is a requirement.
Okay. All right. Now, tell them what's so great about a VA loan.
Yeah, so what is so awesome about a VA loan is it's 100% financing, which means zero money as a down payment. And there's so many other advantages too. One thing I really like about a VA loan is it does not have what's called mortgage insurance. Mortgage insurance is most of the time included in your mortgage payment. So if you use another loan program and you don't put a lot of money down, which most buyers don't have to put down, you are charged what's called a monthly mortgage insurance premium. And that can range anywhere from $100 to $250 a month. So the good thing about VA is you do not have a down payment, but you also don't have that monthly mortgage insurance, which can really save you some money a month. And it could allow you to qualify for that much more of a home because you're not going to have that mortgage insurance included in your mortgage payment.
All right, so let's help our veterans out so they fully understand. So now we know how you can be eligible for this benefit. Let me ask you this, because I had a client before. If you're a child of a veteran, could you qualify?
No.
Okay, yeah, and it was really a sad story, honestly, because their father was in the military. They weren't my client until like the second, I was their second agent. But at some point, they thought that because their parents were in the military, or the wife's, I think, dad was in the military, they thought they also qualified for a VA loan. They got through, started underwriting and everything until they got, denied the loan. So just make sure you're eligible up front. But if you're a spouse and your husband or wife die in the military, you do qualify, I believe.
You do qualify, but it's so important that any loan officer that you're working with, especially if you're working with me, if I know you're going to do a VA loan, we want to start with a pre-approval. And so a part of that pre-approval process is determining your eligibility. It's very easy to determine. So I'm surprised that you said they got so far in the process, because for me, that's like the first couple of days. Like when I'm taking an application, you say you're a veteran, I'm going to be sending over the information that I need to determine if you're eligible. And that's something that can be done very easily and very quickly on my end.
Okay, very good. All right, so let's talk about interest rates. So if they're doing a VA loan, is it typically, I know that interest rates vary with the market, but what do you find? Are they the same as FHA? Are they the same as USDA? Are they higher than conventional, lower than conventional? Do they give veterans better interest rates, I guess, is the question.
Yeah, so obviously it depends on your credit score. So I'm going to take you kind of like through what we're looking at right now, and it'll kind of make sense. So if your credit score is about probably 660 and below, so the minimum credit score for VA is 620. So if you're 620 up to 660, you're not going to necessarily get a high interest rate, but what you could find is that you have additional closing costs. So what sometimes happens is when you have a lower credit score, which will be below 660, they will say, okay, I will give you a good rate. So maybe 3.25, 3%, not bad. They'll give you a good rate, but we're going to charge you a little bit for it. So maybe your closing cost is $6,000, it might go up to $7,000 or even $7,500. So they just charge you for the rate. That'll be the biggest difference that I see with VA. We also find that with other loan programs as well, but definitely VA. But if you have a credit score above 680, even in the low 700s, the rate is very comparable and competitive with the other loan programs.
Okay, very good. So let's talk about these student loans. Now, a lot of veterans don't have that many student loans that they use, like the GI Bill and that sort of thing, but some may have, do they still call it the GI Bill? I don't know, I'm aging myself probably, but you know, a lot of times that's one of the incentives of joining the armed forces is that you might get your student loans, or you don't have to take out student loans. But for the ones that do have student loans, how does the VA look at student loan debt?
Yeah, so regardless of if it's in deferment or not, we do have to count the payment. Even if you are in an income-based repayment plan and the payments say $125 on credit, but your balance is $20,000, we would not count that $125 payment. We have to recalculate a new payment. This is the same for FHA. So here's how it's calculated. You take the loan amount of the student loan and you take 5% of that, and you divide it by 12 months. So it actually doesn't come up to be a big payment. For instance, a $20,000 student loan, the payment that we would use would be around $85 a month. So it's not a large amount that we do have to count against you. But what I find is, although the veteran himself or herself may not have student loans, a lot of times the spouse goes on the loan with the veteran. And sometimes and oftentimes we see that a spouse or a partner may have some student loan debt, and we do have to, you know, calculate that payment for it.
Okay, very good. So I know FHA is 1%, so this is less than the 1%.
That's right, yes.
Say that calculation one more time so we make sure we get it. You said student loan divided by 5?
Yeah, so no, times 5%.
Times 5%, okay.
So 20,000 times 5% equals 2,000, and you divide that by 12.
12. Okay, gotcha. Where on a typical student loan, like not typical, but an FHA loan, they would look at that as $200.
Yes.
Is that right? Yeah, the 1%. Okay, so they are doing a lot less than like FHA. So that's good to know. All right, we're on question number 4. And this is a big one because I think sometimes VA borrowers will come to me. They know it's 100% financing. They don't have to put a down payment. But it's those closing costs that they're really surprised about. And I said, well, you still have to have money for closing costs. And so I think in some, there's some miscommunication about who pays what. So when you have lender closing costs, you have your taxes, you have your prepaids. What does the lender pay anything? Does the buyer pay anything? And what is the seller's, does the seller have to contribute anything to their closing costs?
Yeah, great question. So there are certainly a few small fees that the buyer just cannot pay for. One that most commonly comes up is anything associated with a homeowners association. So if there's like an association letter or something like that, that needs to be retrieved for loan approval, the seller would have to pay that. But as far as closing costs are concerned, they are the responsibility of the buyer unless the seller agrees to pay all or a portion. So it's similar to FHA. The seller is allowed to pay up to 6% for the closing costs, which is never that much, you know, just so you know. You're usually looking at around 3%, maybe 3.5%, depending on the taxes in that area. But essentially, you know, the agent and both agents, buyer's agent, listing agent, would negotiate, and hopefully the seller would be willing to cover at least a portion, although that's not guaranteed. So I would recommend to have that. But even if the seller covers, you know, most of it or all of it, you still have your appraisal fee and you're still going to have your earnest money. So that could be at least $2,000 or more depending on the purchase price.
All right. So what about the VA funding fee? Because there's a VA funding fee, kind of like the FHA mortgage insurance fee, that 1.75%. There's a VA funding fee. Who pays that?
Yep. So that's actually financed.
Okay.
So it's similar to FHA. And you know, when I go over the closing costs, I usually never mention like the mortgage insurance premium or the funding fee. Of course, when we go over the loan estimate, we're going to see it, we're going to talk about it. But most of the time when people think of cost, they like, well, what's going to come out of my pocket? And that's just not something that comes out of your pocket. It can be around 1.7, so similar to FHA, and it can be up to 3.6% if you've used a VA loan before. So for instance, I put an example here. So for $200,000, that would be a purchase price. The funding fee would be around $4,500, and that's financed on top of your loan amount and not paid out of pocket.
Okay, good. All right, it's good to know. So let's talk about VA appraisers, because on the listing side of real estate, some agents, in my office included, we have a little Facebook group, and they were like, oh, I didn't take the VA, I went with the conventional because I didn't want the VA appraiser to like basically, put my sale at risk, because they felt like the VA appraisers are much more picky about different things. So do VA loans have their own appraisers that are not the same appraisers as FHA or conventional?
Yes, they do have their own appraisers, and it is completely separate from any loan officer or mortgage company. So there's us and whomever you're working with, and then there's the VA, and they manage their appraisers exclusively. They have a 14-day turnaround time. So that's why it's really important when you go under contract to get that appraisal ordered as quickly as possible. And when a value comes in less than the purchase price, that's called tidewater. And that actually does happen a lot for VA appraisals, where, and if you have FHA or conventional, the appraiser may be a little bit more aggressive with value to get closer to the contract price, but VA is not like that. Even if it's a matter of $3,000 or $4,000, they will put their heels in the sand and say, we're not moving it. And then, of course, you would go back to the table and renegotiate. And luckily, like FHA, there is not an appraisal contingency. So you have that time. If, the appraiser takes this whole 14 days to get the report back, you do have that time. But we're not able to rush appraisals, and really disputing value is very difficult. As far as the property, there are some requirements, much like FHA, and honestly, they're very similar to FHA. So any major noticeable damage to the home that could be a safety hazard, like broken windows, wood rot around trim, decks or porches that aren't, done very well. They may be very old, maybe they're splintering, there's some noticeable damage there, noticeable sagging, things like that. Damage in the fascia, so it's like messed up siding, things like that could cause an issue.
They really want to make sure the veteran has a home that is in very good condition. Kind of like VA, but I feel like they take it up a notch with it's kind of like FHA, but I feel like VA takes it up a notch. So just know that even though when you have your pre-approval for VA, that seller, you may have a good offer, but say your offer is going up against a conventional, that depending on how much experience that listing agent has, that might be something in the back of their mind, like, okay, I don't want, you know, the VA appraiser to come in. So just be flexible, especially in this market. We're in a seller's market, so it may take you a little bit longer sometimes to get your loan approved. Or get your, sorry, not your loan approved, but your offer accepted in this market. All right, so what else do I want to ask? All right, so debt to income ratio on a VA loan. Okay, so the high I've seen, I'm going to go over debt to income ratios. I have a video about it. But with really good credit, in any loan officer, not with you, but just any lender, I've seen lenders go up to maybe 51%, 52%, you know, depending on the circumstance. What's the highest that a VA loan debt to income ratio will go up to?
So VA is actually very unique in that they're not as strict with DTI requirements. But, you know, to make sure we get an approval, I would say to follow the FHA, which would be 56.9%. You know, closer to the 51, 52, 53, obviously would make me more comfortable. What I put on my notes is 50%.
Okay.
But they're a lot more flexible with VA DTIs.
Right. Meaning that the maximum they might let them go up to is 50, at 56.
Yeah.
56%. Yeah. But I think what you're saying is if it's off a little bit, or if your credit comes a little bit in different that month, then it might not make it. So you don't want to like be at the edge of that DTI ratio.
Yeah. And one thing I will add about DTI is there's another layer that VA adds to everything, and it's called disposable income. So they actually calculate what your disposable income is after your new mortgage, after all of your debt payments, and they look at the square footage of the home. So what they do is they say, okay, this home square footage is 2,000, and there's going to be maintenance costs associated with this. So they actually calculate that, and I do that too. Anytime I get an application for a VA loan, I look at disposable income. So I take their gross income and I subtract all those debts out on a monthly basis, and then I take an estimate of a square footage. I usually do like 2,500 or 3,000 to be safe, and you times that by 0.125%. No, I think it's 0.25. Let me see. Yeah, 0.125%.
Yeah, that's something I didn't know about VA loans. They have to do, so they make sure that that veteran has enough money to pay that mortgage.
Exactly. And so the amount that you have to have as disposable income is depending on your family size.
Oh, okay.
So gotcha. If you have a bigger family, they want more. And you can actually look that up if you just like Google VA disposable income. There's a lot, like it's a very popular chart.
And how do they know what your family size is from the tax records, like who you claim as dependents, or what you just say?
A good question. They're going to look at a lot of different things. Much like USDA, they look at income deposits on bank accounts.
Okay.
For spouse. Well, obviously, like the record for a spouse would be known, but primarily tax returns. But you know, I've never had anyone. You wouldn't want to falsify that.
Gotcha. Yeah, you want to make sure that you're saying.
Yeah, don't falsify it.
A lot of people use like the dependent. So if you're claiming this amount of kids on your taxes or this amount of dependents, they might use that. All right. So we're on 7. I have 9 questions. So we're on 7. We're doing well. All right. So some VA loan borrowers don't have the closing cost amount, and maybe the seller is not willing to pay as much in closing costs. So are there any down payment assistance programs that a VA loan borrower that you're aware of? Because every state will be different probably as to what they have access to, but are there any programs that will help them pay their closing costs?
No, to my knowledge, you cannot use any down payment assistance programs in conjunction with VA, and down payment assistance programs usually are just that. They assist with the down payment. You know, so you don't really, I personally don't know of any programs that assist with closing costs.
Closing costs, okay.
Specifically.
So if we find one for you guys, VA will find one. But yeah, since it's 100% financing, they don't have like additional funds to help with the closing costs. But okay, so let's ask about this. So I'm a VA loan borrower. Can I rent my property out? So I buy a house. How soon? We're gonna talk about investments, like I guess if I'm changing my VA property, because at first, of course, it's owner occupied, and then I may change it to a rental, or I might want to buy multifamily. So let's like break that down. So can I buy? How soon after closing can I rent my house out?
1 year.
1 year. So same as FHA basically. And then my last question for you, Angel, is what's your number one tip for VA borrowers to make the loan process go smoothly? And then I'm going to let you tell them how to reach you. And plus it'll be in the description as well.
Okay. Yeah. So I think the biggest thing would make sure your credit is strong. You know, I would recommend over 680 to make sure you get the best rate possible. And that's nothing unique to VA. I mean, you're going to see that anywhere you go. In VA, it's a different loan program, but I don't feel like it's all that unique. You know, it's the same essential concepts: low debt, good credit, stable income, right? If you have disability, that's completely fine. Make sure you have all your documents. I'm sure she's went over that before. Make sure that you have your certificate of eligibility and your DD-14.
Okay, very good. Well, tell them how to reach you.
So you can reach me at my direct line, which is 770-371-4703. I'm sure she's going to put that in the bio. And then also my email, which is angel.bailey@homestarfc.com. I do have a lot of Zillow reviews. I work a lot with first-time home buyers, but not exclusively. But I have a ton of those online where you can look at as well.
All right. Thank you so much, Angel. Yeah. Say hi to your husband for me. I'll see you at the next home inspection. Thank you so much.
Yeah, thank you. Have a good night.
You too.